One thing we see often when starting to work with a new client is they've gone through a period of growth, and yet although they've grown and increased their revenue, they've actually decreased or neutralized their profitability. Hey, my name's Barry William Magadidi, CEO and founder of the Game Changers, and we help our clients to triple their profit and double their time off in 12 months or less. Today I want to speak to you around why we see a lot of clients or a lot of people that come to us have either neutralized their profitability or they've decreased their profitability as their businesses start to scale, and what you can do to actually resolve that. We have a few programs where we help our clients to triple their profits and double their time off, and one tool that we take every single client through is what we call the profit approach. And it's around the 5 different ways that you can grow your company, and it's really not that complicated. So first I want to take you through the model so you can help to sort of understand what you should be evaluating your business at. And if you're not already doing this, maybe look at implementing this right now. At the end of this video, if you want a template, just comment below or send us a message through either our website or our Facebook page or Instagram or something, and we'd be sure to happy to send you out that template. So the profit approach is around the 5 different ways to grow a business. Jay Abraham talked about 3 different ways, and we actually found that there's 5 different ways to grow your company. And the first way is around getting more leads. If everything stayed the same in your business right now and you just got more leads, no doubt your business would grow. And it's often the one area that most people think they need to work on most is more leads. Yet the challenge with that is that going acquiring more leads is actually expensive, particularly if you're paying for them or it's spending more time. Yet 9 times out of 10, we find that more leads is actually not what most business owners need. It's something else within this business framework. And so the second part of the profit approach is around conversion rate, around looking at the current leads you're getting in and looking at ways you can increase your conversion rate so that you're converting more clients for less leads. And we would definitely always approach conversion rate earlier on, or looking to fix that before more leads, especially if you're getting leads, because if you're paying, let's say you're paying $10 or $20 per lead and you're only converting 1 out of 3, that's an expensive conversion depending on the cost of your product or service. Yet if we can increase your conversion rate to 50% or in many cases 80% and plus, it means you're paying less to acquire a customer. So the second part of this profit approach is around increasing sales conversions. The third way is around increasing the average value or the cart value. So if you've got a client, you've generated a lead, they've come to you, they've bought a product or service, how could you actually get them to spend more money with you on that initial purchase? Now, I'm sure you've probably been in some of those online funnels where you click to buy something and then it's like, hey, would you like more of the same thing? And you say yes, and then it tries to sell you something else, or maybe you say no and there's a downsell. That's smart marketing and advertising, and yet most traditional businesses that are not more traditional businesses that are not necessarily online aren't using those same methodologies or approaches. And so the third part of the profit approach is increasing the average value of your client, getting them to spend more money, which once again brings your cost of sale down and brings your profitability up. The fourth way is around the lifetime value of a client. I think the number one issue I see in most businesses is their retention rate. There's a big hole in their retention rate. They do all this work to get leads in, they do all this work to convert those leads, and maybe they've got a decent sales value, yet they don't do enough to keep these prospects or keep these clients coming back over and over and over again. They maybe have one product they sell and there's no ascension model to getting that client to then buy the next thing and the next thing and the next thing, or they just simply don't do any remarketing or any advertising to bring those clients back in. And so the fourth part of the profit approach is around lifetime value of a client and getting a client to hang around longer. And the fifth and final area is around profitability. How profitable is each one of your products or services, and how many of those services do you have to sell to actually break even on your operational overhead expenses? Now often, and I remember myself back in the early days, I'm like, oh, but this thing's just $1,000 or this thing's just $2,000, it's a lot of money, I'll just go and buy it. Yet when I looked back then at, let's just say my service was $10,000, I paid some money out to get that service delivered, I paid some more money out for overheads, I might have only had a 5 or a 10 or 15% margin. So let's just say I sell $10,000, I make $1,000. So to spend that $1,000, I need to go and make another $10,000 just to break even on spending that money. And so when you start to think like that, it really puts into perspective the amount of money you're spending on things that you possibly don't need, or it also puts into perspective around the fact that your profitability might not be as high as what it should be, 20, 25, even 30% net margins. So when we talk about profitability, that really starts to, for us, identify with our clients whether or not their product or service is actually priced correctly, because a lot of people price their product based on what they think it's worth or based on what the market is showing it's worth, but not on what they actually need for their business to soar and succeed. And the biggest mistake you can make in business is to grow a business and believe that it's okay not to be profitable for a period of time. I believe that every single business should from the get-go look to bring about profitability, no matter what, at any expense, bring about profitability from day one, because that's what's going to bring a sustainable and lifelong company, but it's also what's going to bring about the right mindset and biases later on in your business to grow faster. And so coming back to where we started with this, the reason that a lot of people that we see, business owners, aren't making money is because from very early on, they didn't cultivate the mindset around making money from the get-go. And so what's happened is they've got way too many people on board, they haven't got effective processes and systems, they're not really clear on the cost to actually deliver their product or service or the profitability, and they tend to compete with other competitors in the marketplace, which means that because they're competing, they haven't got as much money as they could to attract the right type of clients. And they start to play this tit-for-toe game rather than actually becoming market leaders and having their three uniques in the marketplace. So next thing I want to share about this is there's a really cool methodology called Profit First, and I think that every business owner needs to be operating in a way like that. Many years ago, I realized that I could make a lot of money, but I never had a lot of money, and this was quite concerning and almost a bit mythical for me. I would get my P&L reports and go, wow, like we've made all this money, yet where is it? It's not in my bank. I'm not sure if you can relate to that or not. Then I would get a tax and a super bill, and I'd be like, oh my God, like not only have I not got the profitability in my bank, but I haven't got this money for my tax and superannuation, and then I'm in debt with the tax department. And I'm not sure if you can relate with that or not, but through that experience, I was like, I need to find a way to overcome this. And so I remember that early on, one of my family members used to get paid and separate their cash into small envelopes. And they'd have an envelope for bills and an envelope for this and an envelope for that. And they'd divide their money when it came in into sections to know how much of a budget they had for the different areas. And I thought this was brilliant and certainly something I could use in my business. So many years ago, I opened up several bank accounts. I'd open up one account for all of my expenses and one account for my tax and my GST and one account for safekeepings, cash aside. And this was a significant game changer for me, because what it meant is that every time my tax and GST came about, I always had the money there to pay for it. I never had to worry about it. But also when I started to notice my expense account go down, it caused me to go out there and make more sales or bring in bad debt that I had, or it just put me into focus to get more money rather than just spend what was there. And then when I had the tax, I'm like, oh my God, what do I do? Because I remember my early business, I would get to experiences where I couldn't pay my staff, and so I'd rob money out of my tax account, or I'd take money out of my pay to pay my staff. And a couple of years ago, I came across the Profit First methodology by a guy named Mike Muscolts. And it was a game changer for me, because it was the exact same methodology that I'd adopted myself, yet the one key difference that he was putting in place that I hadn't yet mastered is that he'd gone through and interviewed thousands of companies around the world to work out, based on revenue, what sort of percentage allocations you should be having in each of these accounts. So I went across and looked at our current business and went, okay, well, we're making this much, we're generating this much revenue, we've got a cost of sales of this, and it gave me a percentage of what we should be putting into our profit account, what percentage we should be putting into my owner's drawings account, what percentage we should be putting into our operational expenses, and what percentage we should be putting into our tax and our GST account. And at the time, our numbers were a bit skewed, but it was then a benchmark for me to start to work out how I could allocate my money in such a way and change my company in such a way to be profitable, more profitable day in and day out. And so the difference in this is really around the thinking, is that when we look at the bank and we go, oh, we've got 10 grand in there, we've got 50 grand in there, there's almost like we've got this 50 grand to spend, because we're not necessarily calculating, allocating what we've got coming up in tax and GST. Many business owners aren't, you might be, or what we've got coming up in unexpected bills. Yet with the Profit First approach, it allows you to determine what amount goes where. And if you start noticing that you're always becoming short in your expenses account, it means you need to start to look at generating more income or reduce your expenses. And so it's a very cool tool that causes you on a regular basis to start to look into certain aspects of your business to make those 1 or 2 degree changes that mean you don't get surprised with a big bill, or you don't get surprised at the end of the financial year to see that you've made money and haven't actually got any money. So right now, regardless of where you're at, how well are you managing the cash flow in your business? Are you finding that you've always got abundance to pay your staff and pay your suppliers and pay yourself and some left over? Are you living week to week? Or are you finding that often you don't have enough money to pay your staff and pay your suppliers and pay your tax and GST? Regardless of where you're at, I highly recommend to go and implement the profit first approach, and to also look at implementing the profit approach I spoke about at the start around those 5 key ways to grow your business. Because what you're going to find is that 90% of the time, lead generation won't be the key answer. And often for us with our clients, it's the last thing we look at because it costs money. It doesn't cost any money to increase your conversion rates. It doesn't cost any money to sell more stuff. It doesn't cost any money to retain clients. It doesn't cost any money to up your prices. Yet when you go through and make even the smallest incremental change across those by a few percent, the multiplication in profitability of your business is 6 to 10 to 12x what it is through just increasing lead generation, which means that your company's healthier. It means you've got more money to then go and invest in advertising, but it also means that your advertising dollar goes further because you're converting those leads higher, you're selling them more stuff, you're keeping them for longer, and there's greater profitability on your product. So regardless of where you're at right now, if you find that you're multiple 6 figures coming on 7, and that as you grow, your growth is expensive, or you notice that you're in multiple 7 figures, as many of our clients are, and you're not quite making the money that you should, or you've never got enough money in the bank at the end, my tip for today is to implement the profit first approach and those bank accounts or those envelopes to put your money into and work out your allocation. I'll be doing it straight after this video. And also to hit us a reply or reach out to us and ask us for the profit approach template. I know it can be a bit confusing, but the profit approach template, so you can start to track down. It's just a simple Excel or Google Sheets document to track the multiplication of those 5 key areas, to then start to create some predictability around your growth and start to create some predictability around your profitability. If you're curious to know how we've helped many clients all around the world to triple their profits and double their time off in 12 months or less, please reach out to myself or the team through one of our social channels. On our website, there's an opportunity to book an appointment to speak to one of the team, or simply hit a reply on this, wherever you're watching this video, on the interwebs below, and be more than happy to reach out to you and see how we can help you and your business create more money, allow you to have more free time, and finally fall in love with your business again. My name is Barry William Magadidi, CEO and founder of the Game Changers. Thanks so much for watching to the end. Hopefully it was valuable. Please like, share, comment, and I look forward to seeing you next one. Bye for now.